The Morning Star Candlestick Pattern is a beacon of hope for traders in the often turbulent world of financial markets. It emerges from the depths of bearish trends, signaling a potential shift in the balance of power between buyers and sellers. This pattern, with its evocative name, suggests the dawn of a new day, a potential transition from darkness to light, from selling pressure to buying momentum. Candlestick patterns like the Morning Star offer a visual language for interpreting market sentiment. They provide insights into the ongoing battle between bulls and bears, helping traders anticipate potential price reversals. The Morning Star, in particular, is a powerful tool for identifying situations where a downtrend might be losing steam, paving the way for a potential bullish upswing. Understanding and effectively utilizing this pattern can be instrumental in making informed trading decisions. By recognizing the formation of the Morning Star, traders can potentially capitalize on emerging opportunities and position themselves for a possible market upswing. This pattern, therefore, serves as a valuable tool in a trader's arsenal, guiding them towards potentially profitable outcomes. The Morning Star pattern is characterized by a distinct three-candle formation that unfolds over 3 trading periods. Each candle in this sequence plays a crucial role in confirming the potential reversal, providing a clear visual representation of shifting market dynamics. The first candle is a long bearish candle, reflecting the continuation of the prevailing downtrend. It signifies the dominance of sellers in the market, pushing prices lower. The second candle, typically a small-bodied candle, either bullish or bearish, reflects indecision in the market. This candle, often gapping down from the previous candle, represents a period of consolidation or a pause in the downward momentum. The bulls are tentatively stepping in, challenging the dominance of the bears, but the outcome of this struggle remains uncertain. The third and final candle is a bullish candle that closes well within the body of the first bearish candle. This candle signals a resurgence of buying pressure, confirming the potential reversal. The bulls have successfully wrestled control from the bears, pushing prices upward and potentially marking the beginning of an uptrend. Together, these 3 candles paint a picture of a market in transition. They illustrate the waning influence of sellers, a period of indecision, and finally the emergence of strong buying interest. This sequence, captured vividly by the Morning Star pattern, offers traders valuable insights into the shifting tides of the market. The Morning Star pattern, beyond its visual representation, reflects a deeper psychological shift in market sentiment. Each candle in this pattern corresponds to a particular emotional state of the traders, providing insights into the evolving dynamics between fear and greed. The first bearish candle signifies the prevailing fear and pessimism in the market. Sellers are in control, driven by negative sentiment and the belief that prices will continue to fall. The second candle, often characterized by its small body and indecisive nature, marks a period of uncertainty and hesitation. The bears are questioning their stance as some buyers cautiously enter the market, enticed by potentially oversold conditions. This period of consolidation reflects the transition in market psychology as fear begins to dissipate. The emergence of the third bullish candle signals a resurgence of optimism and confidence. Buyers, sensing a potential bottom, step in aggressively, driving prices upward. This bullish momentum reflects a shift in sentiment, as greed and the desire for profits begin to outweigh the previous fear. The Morning Star, therefore, captures not only a potential reversal in price action, but also a significant shift in market psychology. It highlights the transition from fear-driven selling to greed-driven buying, offering valuable insights into the emotional undercurrents driving market movements. Section 4. Confirmation is key, validating the pattern. While the Morning Star pattern is a strong indicator of a potential bullish reversal, it's crucial to remember that no trading pattern offers guaranteed outcomes. Confirmation from other technical indicators is essential to validate the signal and increase the probability of a successful trade. Traders often look for increased trading volume on the third bullish candle of the pattern, confirming strong buying interest. Furthermore, analyzing the pattern in conjunction with other technical tools, such as trend lines, moving averages, and oscillators, can provide further confirmation. For instance, a break above a key resistance level coinciding with the formation of the Morning Star strengthens the bullish signal. Conversely, if the pattern appears near strong support levels, it increases the likelihood of a successful reversal. traders should also consider the context of the broader market trend. A Morning Star pattern carries more weight when it forms after a prolonged downtrend, suggesting exhaustion among sellers and a higher probability of a sustainable reversal. Prudent traders use a combination of technical analysis, risk management strategies, and sound judgment to make informed trading decisions. Section 5. Practical applications and trading strategies. The Morning Star pattern, once confirmed, presents traders with potential buying opportunities. However, it's crucial to approach trading with a well-defined strategy that incorporates entry points, stop-loss levels, and profit targets. A common entry strategy is to buy above the high of the third bullish candle, confirming the upward momentum. Traders often place their stop-loss orders below the low of the entire pattern, limiting potential losses if the reversal fails to materialize. Profit targets can be determined based on various factors, including support and resistance levels, Fibonacci retracements, or a predetermined risk-reward ratio. It's important to remember that trading involves inherent risks, and no strategy can guarantee profits. Proper risk management, including position sizing and diversification, is crucial to protect capital and navigate market uncertainties effectively. Section 6. Conclusion: the enduring relevance of the Morning Star. The Morning Star Candlestick Pattern, with its evocative name and distinct three-candle formation, remains a valuable tool for traders seeking to navigate the complexities of financial markets. Its ability to visually represent a potential shift from bearish to bullish sentiment continues to provide insights into the ever-changing dynamics of the trading world. By understanding the psychology behind the pattern, confirming its signals with other technical indicators, and employing sound trading strategies, traders can potentially capitalize on emerging opportunities and position themselves for success. The Morning Star, therefore, stands as a testament to the enduring relevance of candlestick patterns in modern trading, offering a timeless guide for those who seek to decipher the language of the markets.